I really think it's bigger than the advent of the internet. I think it's just massive.
Bigger than the internet?
I think it's bigger than the internet. And I find that so exciting as a tech investor and scary, right? It could not be a better time to be deploying capital into the right things. On one hand, you'll see this huge shift, but on other hands, there'll be some things that won't change. So,
hi, I'm Tom Guinness and welcome to the Raising Your podcast.
Today we welcome Lucy Rands to the show. Lucy is a partner at ETF Partners, a UK-based venture capital fund that has been investing in sustainability-focused innovation since 2005. Since then, they've made significant investments across 5 market segments: energy transition, future mobility, green connectivity, responsible consumer, and sustainable food.
You don't want to miss this.
My name's Lucy. I'm an environmentally focused VC. I'm a partner at ETF Partners, which is the Environmental Technologies Fund. And I've been here, actually I'm about to celebrate 10 years next month.
10 years?
10 years next month, yeah.
Congratulations.
Thank you.
And so what are you trying to achieve at ETF? What's the mission?
I think the core of what we do and what we're always trying to prove is that environmental sustainable investing is economic, that done well, impact and returns really drive each other. And I think that's really important for the climate crisis as a whole, that we can redirect capitalism towards solving it. And I think that innovation is a really key pillar for that. So we think that's really, really important.
Right. And so tell us a little bit more about you. Tell us about your story. How did you get into, sustainability investing?
So I'm a career VC. So I joined not long after my studies. I studied material science at Oxford, and I did a master's in the lab, in a very niche form of making silicon solar cells more efficient, and got the climate tech bug, or the clean tech bug, the sustainable tech bug, whatever you want to call it. Or fed it, should I say, because I've been interested in that before. And all my gearing really had been towards lab work or material science innovation. And I loved the innovation side of things and really wanted to work in that. But lab work wasn't quite doing it for me. So I wanted to, at the time, I didn't really know that there was another option.
Yeah.
But when I sort of raised my head from the science and realized that there's this whole world of innovation and tech where you can work at either starting companies or funding them, I was really, really excited by that. And was very lucky, really, that the team here, or the partners here, took a risk on me, really. I was pretty fresh-faced and inexperienced at the time, and they've really taught me all that I know. So it's been a great journey.
And so was there a specific moment when you realized the planet was actually a massive investment opportunity?
Yes, a great question. I'm not sure there was a moment. And honestly, since I was about this tall, I was obsessed with the idea of, I really wanted to make solar cells that looked like roof tiles, because I saw this solar roof panels were getting rolled out a lot of the time, and I thought they were really ugly. And I thought that was the main barrier to entry at the time, was that people just didn't like the look of them. So I was like, I want to make them beautiful. And then Elon Musk stole my idea. So
Elon,
yeah, I know.
Stealing your idea.
So it's always been really, it's always been a theme for me. And then just the idea that you can build a big business and a really strong career whilst also having that doing the right thing and doing the right thing for the planet and the right thing for nature has always really, really appealed to me. I'm a lover of the natural world, and that continues to be a big part of my life.
So if you can hear this, Elon, we want our idea back.
Exactly. Yeah. Coming for you. Yeah. He's got some other ideas now. You can
he's got plenty of ideas. He can keep some of them and just give us back the solar cells.
Yeah.
So why does the world need ETF Partners to succeed?
I think coming back to this point about proving that sustainable investing is, there's a really strong economic case for it, I think is really, really important. Because if you donate money or you, in the world of philanthropy, which is needed, by the way, there's a whole part of the market that really, really needs that. You kind of get in you get out 1 times what you put in.
Right.
Whereas I think if you mix capitalism and impact, you can have a huge multiplying effect on that. And I think that nowhere is that more important than innovation and climate.
And so would you categorize yourself as an impact investor?
It's a really great question. I think people have different definitions of it. And some people associate the word impact to not mean economic, right? So I always say we invest where impact and economics meet. And
when we're talking about climate versus sustainability, could you explain to us kind of the different meanings behind that, and where specifically does ETF operate?
Yeah, great question. So there's been different iterations and different terms used for the industry over the years. It was clean tech when I started, and that went out of fashion. And then climate tech is kind of doing a bit of a cycle as well. And for us, we've tended to always use the word sustainability, and actually sustainability through innovation is always been our tagline. And for us, it sort of implies this, the breadth of areas that we look at. It implies capital efficiency. It implies this economic piece that perhaps isn't always associated with the other terms. So for us, there's a nuance there, even if there's a lot of similarities.
Right. And so if we dive into the part of the market where ETF operates, could you name some investments that you've been a part of since being at ETF?
Yes, we've been part of many investments over the last 10 years. Some recent highlights of ones I've led are a company called 𝐬𝐮𝐬𝐿, which is a British company doing AI for project management. And they feed in sustainability data into all those decisions you make as part of a large project. But fundamentally, they're driving efficiency within that market, which leads to huge cost savings, huge time savings, huge material savings, and carbon savings as well. Really proud of that one. I've also worked for a few years with a French business called Fairly Made, which is in fashion supply chain and impact analysis for brands, which is doing great things in that industry. And I've worked on a few of our exits as well, which we're always very proud of. That's the goal, right? Is it
fantastic? Which exits have you been part of?
So I've worked on a number of our exits as well, which is always the goal. I led on our exit of Greenbird, which is data integration for energy companies, which we sold to GE Vernova.
And of all the companies that you've backed, are there any which felt like a gamble at the time, or were they all very straightforward and the founding teams were very convincing?
So they're all a gamble, right? Yeah. So
all a gamble.
They're all a gamble. I believe wholeheartedly in all of them, I think. But the job is to take risk, right? So when you're backing a loss-making growth business, it's fundamentally going to be risky, and you can almost always find the risk in what you're doing. You can almost always find a reason not to do it. And part of the job is building that conviction and really be willing to make that bet and stand behind it and help make it a success as well, right?
Right.
So that we're not just gambling.
So giving it all the best opportunity it has to succeed, right?
Exactly. Yeah.
So when it comes to the investments you look at,
yeah,
what type of investments does ETF invest in?
Yeah, so we've talked about the impact piece. That's obviously the common thread that always has to be there.
Yeah.
But in practice, that spans lots of different industries. So we see a lot in energy transition. We see a lot in sort of sustainable logistics, transport, industrial efficiency. Obviously AI. I mean, AI again is going through everything now.
Right.
We see space tech. We've actually backed a bit in quantum recently. Insurtech and climate risk is another topic. Right. So it's pretty broad across industries. And then we operate at the early growth phase. So I I know not all rounds are created equally, so we don't always like to use the terms, but the A to C rounds is typical.
Right, and what kind of ticket sizes go into these rounds? Because A to C these days, when you're seeing billion-dollar seeds, I have no idea what a Series A is anymore.
Yeah, it's a great challenge. We are typically doing about 5 to 15 as a first check, but we reserve heavily for follow-on. And that's lead or co-lead positions.
Geographically, is it across all of Europe or is it beyond?
All of Europe.
All of Europe.
Not beyond.
And when it comes to this quantum piece, how is that sustainability?
Yeah, great question. So quantum computing is a paradigm shift in computing, which you might think has already happened with AI, but it's a different step. And there are certain areas that certain challenges that quantum can tackle that AI isn't as well suited for. And we've seen real leaps forward in quantum technology recently that's really accelerating in that market. And it's happening a little bit quietly, I think. It's kind of not getting as much attention as AI, obviously. But there's a lot happening. And the applications that for the technology at the end of the day can have huge positive environmental impacts. An example would be weather modeling. And there's many more applications you can use it for that would have the very, very positive environmental impact.
Yeah, where do you think the biggest investment opportunity is right now, today?
I mean, I can't not say AI. It's changing every market. It isn't necessarily the first thing you think of when you think of sustainability, but actually there's huge, crossover isn't the right phrase because, but there's huge synergy and challenges, right? So the obvious challenge being the energy consumption of AI, but that creates a whole market around, or boosts the whole market around energy transition, whether that's in production or distribution, efficient use, and then actually the efficient running of models. So things like model compression, I think, super interesting. So that's on the solving the challenges side, but then there's also the applications. So, I used the example of nodes and links in a portfolio, which is AI for project management.
Yeah.
But that's a vertical application that's helping make an industry more efficient, that has a climate application. So I think we'll see lots of those as well.
When we think about the AI stack, where is most interesting to you within that? Is it the infrastructure layer? Is it the application layer?
I think mostly it's going to be application layer, because fundamentally, to have a positive impact, you often have to then have a specific use case, right? I think if we were looking horizontally, things like model compression, all the efficient uses I mentioned is also potentially interesting. But I think it'll be mostly application layer. And that's not actually that new, right? So we've been backing application layer AI businesses for a while.
Yeah.
And I think the important thing to mention as well is by application layer, we don't mean a wrapper. We do mean real AI models, usually access to differentiated data. An example would be a company called 𝐸𝐴𝐻, which is a Greek business that does AI for maritime shipping. I worked on the investment, and they help, they ingest the data from a ship, and other data sources such as weather, and they do smart routing. And they can reduce fuel bills by up to 10%, which also directly is an emission reduction as well. And we exited that company. It was a great result for us a few years ago.
That's an amazing outcome.
Yeah.
What kind of returns could you expect for a company like that? You invest early, you exit.
Yeah.
What kind of returns range would you get for something like a 𝐸𝐴𝐻?
Yeah, so we haven't published the exact figures. It was a very quick exit for us, so particularly strong IRR. We're always looking for those outsized returns that really make an impact at the fund level, not just the individual investment level.
So how would you describe your investment philosophy?
Coming back to some of the themes we already covered, it really is this sustainability through innovation, or where impact and economics meet. So looking for where those two drive each other is really key, and a really deep part of our philosophy. I would say we're also very people-driven, relationship-driven. We like to get in the room and meet founders face-to-face, and that's a big part of our investment decision-making process.
And so when we think about kind of the broader ESG landscape, what do the broader ESG group of people who think greenwashing is a bad thing or a really bad thing, what do they get wrong about sustainability investing?
Yeah, I mean, I think there's a lot to unpack in that question. I also want to differentiate ESG from impact investing, or how I think of impact investing, because I always think of ESG as the responsible running of a business, whereas impact really is truly building a product that has a positive impact. And I think those two things are different, and they're often mixed up. And then I think there's a lot of very smart people in impact investing, but I do think there's on one end of the scale, you need to be careful with the greenwashing, and on the other end of the scale, you tip in towards philanthropy. And I think impact without economics is philanthropy. And I think understanding where impact venture capital needs to sit is really key for that. And actually, it's not charitable. So, there's a lot of amazing, impactful technologies that we need, but that aren't possible on the timescale of venture, and need very different types of funding. And I think sometimes that's confused.
Right. And when we think about, your view on the market and how you see impact today, what's one thing that you thought, at the beginning of your career was correct, but you now have found out it's completely wrong?
Yeah, I mean, many things. No, I've had the privilege of learning from a very experienced team here. So I was able to learn these things without them being too expensive along the way. But the key one is really, it's very easy to believe early on that the best product will win. You can see some amazing technology that sounds like a wonderful idea, but actually, if the sales organization isn't there, or if frankly there's complexity on the side of the customer, things can be really, really challenging, and it can kill a business. Particularly a loss-making business doesn't have the luxury of time to figure these things out. So I think that's probably the biggest early on learning for me is that it's not always the best product that wins.
Right, it's the best business, would you say?
It's the best business, yeah.
That's a great golden rule to live by as an investor.
Yeah, exactly.
And so when we think about kind of what's next, what do you think the new thing will be in sustainability? I know today it's very much focused on AI, and you can see kind of the quantum starting to come in. What do you think is going to be next? So
I know it's not new because it's been taking off for a while, but really this vertical specific AI is really got long ways to still go. And I think one of the big questions with this new wave of AI companies is defensibility. And I think one of the key ways that companies are achieving that and will continue to achieve that is access to proprietary data, and to be able to learn from that data, and therefore to be able to have superior models to others. And really where you can apply those into sustainable tech, particularly around industrial efficiency, I think is going to be really, really exciting. And I think some of those customer bases that can be a little slower moving are really waking up and paying attention, and increasing their budgets for these technologies. So I think that's a place that I'd really like to be. I also think that we will see, it's a bit out of cycle at the moment, but I think we'll see a return of natural capital and the valuing of natural assets.
Right.
Because we all understand that we need the natural environment in order to survive, and putting a financial value on that makes sense. Even if it's got its challenges.
Right. When you say natural assets, what exactly do you mean?
Well, we all need a functioning ecosystem to survive.
Yeah.
If we're going to grow food, if we're going to live in this world, if we're going to drink water, and on a fundamental level. But businesses also need, AI needs, data centers need water to operate, for example. A lot of businesses need water to operate. We all need energy. And a lot of these things, or most of these things, actually come back to the natural world. Critical minerals that are in all the tech in this room. So all these assets that we need often don't have a value associated with them. And trying to build that into our economy is a really key innovation, an economic innovation that will be key to our future.
How do you source kind of the great deals in the market as a VC today? What is the unfair advantage that ETF Partners has that no one else does?
So we're in a privileged position in the market, having been around for 20 plus years as a firm. So we've got deep networks. We are probably the most established manager for sustainable tech in Europe at the stage we invest at, and we're known for that. So that position really helps us. We still have to work hard, right? We still have to work hard to find and win the right deals. And whilst more and more of that can be data-driven, it can be tech-driven, still the best stuff and the core stuff is relationship-driven. So it comes through our networks.
Through the networks, you probably see thousands of decks per year.
Yeah.
How do founders stand out?
So I think the best teams know how to tell a story and have a very clear and simple narrative, which, to get across in a simple email or a deck is a challenge. But the best founders, that's what they're able to do, to really capture your attention early on and bring you along on that journey.
Yeah. So how data-driven is the team at ETF, and how do you use that to inform your investment decisions?
So we do have the luxury of having some data at the stage we invest at. And I won't go through the obvious metrics that are key, things like gross margin, ARR growth. One that I do find myself coming back to is net revenue retention. There's a lot of data that you can infer from that one figure. So it tells you, does the customer love your product? Are they coming back buying more? Are you innovating? And are you able to upsell? And are they sticking around? So I think that's a really key figure that I find myself coming back to. We also do very much look at data around impact. That's not just a gut feel approach. We do analyse and track that. So that is also a key part of our decision-making process. But all that data does need to fit into the narrative as a whole.
Right. So when we look at the narrative as a whole, what is the framework for identifying a must-back business?
So there's so many ways to answer that question. There's what's the Tolstoy phrase about all happy families are the same? Well, not all happy businesses are the same. Success, I think, can look really, really different. So, the data needs to be strong, and there needs to be strong reasons why you believe that business is going to succeed, but it can look very, very different.
And is there something that you look for in management teams in particular who are managing these businesses? Is there a key trait that you look for? So
I think the non-negotiables are integrity and drive and ambition. I think you've got to be a little bit mad to be an entrepreneur. And I've got so much respect for them, the risks that they take, the work that they do, the hours, the stuff they achieve. And as an aside, what we do as investors is such a privilege. We come along when founders have built something incredible already, if they're at the Series A stage, and we get an open door to look at their companies, to assess them, to understand them, and then if we choose to invest and they choose to take us on, we get to be part of that journey from the board level, which is a huge privilege. And the people we're working with are incredible and real outliers. So again, the strengths don't always look the same. It's not always people with a certain background. It's not always people from certain companies. Quite often, the founders that are overlooked are the ones that aren't don't have a stellar CV, but there's usually a common thread of achievement in whatever they've applied themselves to, and they're usually very, very driven to make their companies a success. So I think that what's really key to being a successful founder is understanding just how powerful storytelling is as a tool. And actually, a really interesting pattern is almost all very powerful tech moguls, or indeed powerful people in many industries, end up gravitating towards media, if that isn't where their business started in the first place. Think Elon Musk buying Twitter, which might have looked mad to some, but actually it makes sense. I know Larry Ellison has moved in that direction, and many, many others understand that there's so much power in narrative, which comes all the way right the way back to the early stage entrepreneur. How can you harness your story and that narrative to grow your business?
Right, and I also think you see folks like Jeff Bezos in the Washington Post. You see in France, most of the big media outlets are owned by these French moguls as well. Exactly.
That's it. They go and buy up existing businesses often, and I'm sure you know this. Starting a podcast, right? There's real influence and power to be had in being that platform, and being part of what message is being distributed to the world.
Aware size and pricing of rounds today can vary wildly. How do you size and price rounds in sustainability tech today?
Great question. I could talk for hours on venture capital maths. I think it's a super interesting topic.
Let's maybe stick to the golden rules. Like, what are the golden rules for this?
Well, I think just to come back to the overarching philosophy, I think you need to work backwards from how you make money on a deal. And what we've talked about is fundamentally risky. So you need to believe in these high multiples to be able to make money as a fund, as a firm. So I think those are the principles I always come back to, is what is success for this business? And that feeds into who are the buyers. It feeds into how big is the market? What is the growth rate? What do I think that growth rate can be? And also a really key one that I think is often missed out is this capital efficiency piece. So even if you grow a business over many years and it's worth a lot more than you than you valued it at on day one, if it's continued to burn a lot of capital, you can just 1x your money, right? So all of those factors feed into evaluation, and where you're willing to go in the first place, as well as what are the others paying, and how do I win this deal and position myself competitively. So it varies from deal to deal, and on all those things, but there's many factors that play into that.
And in hindsight, is there one company that you've missed out on investing in that you regret not investing in?
So I've got a funny story on this one, and it's not actually, it was before I started this job, but I sat next to the Tom Bloomfield, the founder of Monzo, at a dinner before he started Monzo.
Wow.
And he was telling me all about his idea to start a new bank, a new digital first bank. And I thought he sounded crazy. And what I should have said is, can I invest in your business or can I join your business? But I didn't see it at the time. So I still had a lot to learn then, but I would say that was an opportunity missed.
So missed on Monzo.
Yeah, missed on Monzo.
But you had caught the sustainability bug by then, and you were not going to become a fintech investor anytime soon.
Exactly.
So that's excusable.
No mistakes made.
So, speaking about the companies you have backed, how do you like working with companies once they've become part of the ETF family?
Yeah. So actually that's my favourite bit of the job, is working with the founders once we've made the investment. My relationship with the different founders actually varies a lot. They need different things. Some of them are very independent, and I see my role primarily as getting out of their way.
Okay.
Others need me a lot and call me a lot, and I enjoy that as well. And where I feel I can add real value in those decisions that they're making, whether it's hiring, whether it's customer approach, whether it's new market entry, supporting on all of that, and particularly on customer introductions as well.
And of those, which is your favorite thing to help founders with?
I do love a strategic brainstorm.
So when we turn our attention to the future,
Yeah.
what's one bold prediction you have that no one else does?
We've talked a lot about AI. There's a lot of people questioning non-AI software at the moment. Multiples are down in the market.
Yeah.
And maybe my controversial view is there's a lot of value there, and a lot of value still to be created in non-AI businesses, particularly vertical software, where you have client relationship, where you have access to that proprietary data. And to be clear, they all need to work with AI and somehow leverage what they've got for the new world in the future. But I think that there's a lot of undervalued assets at the moment in those types of businesses, which a lot of people would disagree with me on.
That is a bold prediction,
Yeah.
especially where public share prices are today for some
Yeah.
of these B2B SaaS
Yeah.
folks, especially the more SME focused ones.
Yeah, but so if you look under the hood and split out horizontal versus vertical, the multiple compression has been in the horizontal business models, and actually the vertical SaaS businesses are relatively unaffected, which is super interesting.
Why is that? The traditional moats,
Yeah.
we hear a lot about them dissolving.
Yeah.
What moats are remaining for these vertical software businesses to remain trading well?
So I believe it's in relationship and data. So if you really understand a market, if you have access to that proprietary information, you are then a fundamental building block for any new technology today. And I think that that's the key. I do think that they will need to innovate and they will need to become AI, right? But I think that there's a lot of value still there.
Right. So do you think this is very much similar to the SaaS transition? So people will be moving from SaaS to AI, similar to what, I guess, license and maintenance folks shifted to SaaS in the past. Is that what you're thinking?
Do you mean more broadly, or do you mean within?
Yeah, more broadly, like the existing businesses that exist today.
Yeah.
They will need to shift to AI eventually. But it's more of a platform shift rather than their business is completely dead.
Yeah, that's what I think.
Yeah.
That's what I think. And I think we'll see, the fundamental change in the whole world that AI is bringing, I think, is unprecedented. I really think it's bigger than the advent of the internet. I think it's just massive.
Bigger than the internet?
I think it's bigger than the internet. And I find that so exciting as a tech investor. And scary, right? But so exciting. It could not be a better time to be deploying capital into the right things. I know that it sounds contradictory to what I've just said, but I think they're linked. I think that on one hand, you'll see this huge shift, but on other hands, there'll be some things that won't change. So relationship will still be important. You will still be able to build moats. I think the example I like to think about is if you sit on the tube and you look around, then yes, there's loads of people on their phones that you wouldn't have had 2 decades ago. Yes, there's a lot of people reading on their Kindles, which you also wouldn't have had not that long ago. But there's also still quite a few people reading a paper book. And I think some things won't change.
It's an incredibly exciting time for people building new businesses.
Yeah.
When you think about founders looking to raise capital
Yeah.
in the Series A range, what advice would you give them?
Yeah, so I think work hard to find the right VC, not just the one willing to pay the highest price. You can't fire your investors, and that relationship will really, really matter. And then I think you will have a lot of conversations with VCs that don't end up investing, and I think try and make those useful. So ask for advice. ask for introductions. So VCs, we all speak to each other, we trade deals. So ask, can you be introduced to someone else? And yeah, try and turn and ask for introductions to clients as well, because quite often we'll have those relationships. So turn your funding process into a productive business development project as well.
Wow. So even if they pass on your business, still ask for intros to, you know, other VCs, customers.
Yeah. And if a VC loves anything, it's giving advice. So ask for the advice as well.
Would you say they need to be shameless in this?
Yeah, I mean, I don't think it's a shameless ask, right? I think it's a fair ask, right? Yeah. We've both, if you've had a meeting, then you've both invested something in the relationship. So I think asking for help is valid.
What advice would you give to aspiring VCs today?
It's a different world. We are also all using AI. So the skill sets we need are changing. I think be indispensable, right? Do what AI can't do, and that's relationship. Can you go out and speak to people? And also it's efficient use of those tools. So if you are able to use those and show that you can build and create value using those tools, that's also going to be very valuable to the VC firm of the future.
And if you weren't a VC, what would you be?
I'd have to be a founder.
You'd be a founder?
I'd have to be a founder, yeah.
Do you think it would be solar cells or something else?
I think it'd be something else these days. I've really fallen in love with where we sit in the market, which is a lot of digital business models. It'd probably be in climate, it would be digital. But frankly, I love being an investor because I have the privilege of working with many different companies at the same time, which you don't get as a founder.
Right. And outside of being an investor full-time, you know, who is Lucy Rands?
Who am I? I'm a mum. I've got a 1.5-year-old at home who is wonderful. I love playing with her. So that's most, I mean, when you say free time, I don't really have any free time anymore. But it's a joy. It's a joy. And any other time, I've actually got a bit addicted to vibe coding myself.
Oh yeah.
I'm trying to learn how to do it.
Is it with Claude or something else?
It is with Claude. It's very, very powerful. And it's been a real journey for me actually, because I'm not a coder, and I've learned a lot about coding from vibe coding. Right, it's been a real learning experience. Really positive, I'd say, for work.
Right, and when you think about being a mum of a young child while balancing an investing career, how do you balance that? It's
difficult at times. I have a lot of support. I have a wonderful husband who is a school teacher. He's very busy as well. Teachers work really hard.
They do.
They work really hard. I had no idea.
Let's not talk about the summer, but...
Yeah, the summer. So that's the positive, is that he does a lot of childcare in the holidays. And we've both got wonderful parents who support us a lot as well.
What's one book or film on sustainability that you'd recommend to others?
Bill Gates' book on how to avoid a climate disaster. John Doerr's book on it's called Speed and Scale, and it's on building sustainable tech. Those are the serious ones. My unserious answer is Clarkson's Farm.
Clarkson's Farm?
Yeah, Clarkson's Farm. Because I think it's about farming. It's not about sustainable tech, but it's a really great and fun way to learn about our food systems and to understand just how. I think we can feel quite removed from climate change, particularly here in London. You know, maybe we have the odd heat wave, but watching that show, he's always talking about how it's an unprecedented year, how the rain patterns have completely changed, how and also what the knock-on effects are for our food systems. And I actually think it's very educational and worth a watch.
Well, Lucy, thank you so much for joining the show today. It's been an absolute pleasure. Thank you.
It's been good fun. Thank you for having me.
I have a quick favor to ask you. Raising Europe is a community-supported channel. If you find that our content has been valuable to you or has helped you in any way, please hit the subscribe button. It's one quick, free, easy way for you to support the channel and help us make our production better each and every week. Thank you so much for joining us on our journey so far. Without you, none of this would be possible.